Paula, in the beginning of the year, everything was good. There was too much liquidity. Equities are going up. But then things have changed. Now equities are going down. Cryptocurrencies are going down. Bonds are going down. So tell me, what's happening? Give me an overview of the markets.
Absolutely. Well, I think we're going through one of the toughest times of the current cycle, and this is due to multiple macroeconomic and geopolitical events, right? So in a very short span of time, we had the war in Ukraine, double-digit inflation, interest rate hikes, and the recent fall of USD caused a lot of market volatility. So based on all that, we're seeing obviously less of VC funding throughout all industries. Particularly in crypto, we had seen $4.2 billion going into private markets just last month, but which is actually a 30% decline from the previous month. But if we look at the bigger picture, since last year, year on year, it's a 90% increase, meaning that the sector is actually doing fine compared to all other sectors. A lot of this went to late-stage series like B2C, as well as some debt issuances, which I think is important to highlight. What happened recently is that big hedge fund went potentially insolvent, but they were unable to repay loans on some leveraged positions they had, which triggered a cascade events after that. And there were a few companies needing to be bailed out. So I feel that we're going to be seeing a lot more of this in the industry because there is a bit of lack of regulation, and there are a lot of companies that are simply not prohibited through licensing from utilizing their clients' funds.
Okay, you mentioned about volatility and it's tough times. How are you reacting to it? Did you change your strategy as a company?
Well, indeed, in SwissBorg Ventures, we're still very active as investors. Our outlook remains positive, and we keep on investing at the same pace. And we're actually just looking to take advantage of the lower valuations. Now we would be looking at least 50% lower than what it was prior to the crash. And we really think that it's the time of companies raising pre-MVP at $200-300 million valuations is definitely over. So last but not least, we'll be focusing on cash-generating companies and also founders that have some experience in bear markets to navigate throughout those tough times.
A couple of times you mentioned about valuations. I mean, for the equities, maybe it's more easy to evaluate the company. But for digital assets, it's a big discussion, cryptocurrencies, how can we evaluate them? So how do we evaluate a digital asset or cryptocurrency?
Indeed, that's a very valid question. Well, I think that the analysts are mainly relying on fundamentals to do analysis. Maybe price-to-earnings ratio is one of the most used multiples in the industry. So the question is, how do we implement that into the digital assets industry? Because the factors are so different, right? Like we should take into account that digital assets are actually trading 24/7, 365 days in a year. They're not geographically separated, and also everything is transparent, no need for auditing, everything happens instantly on the ledger. So taking all of those into account, and if we just simply implement price to earnings, you would probably see that most of them are really undervalued. But at the same time, many from the industry claim that NTV, which is basically the market cap divided by the 24 hours volume, is the best indicator. However, I really think that we need more data, and we need analysis tools like Bloomberg Terminal to be to derive this fair value. Because currently, in most of the institutions, all crypto trades are booked under the same asset class. So this doesn't really allow us for some differentiation there, and there are even certain talks about BTC being an inflation trade. I don't think this can ever happen until all the data is properly classified and available to the market.